teaching investing is that the more I teach about investing, the more I understand it, right? The more I stretch my mind into figuring how the stock market works and how other market works as well. So, my name is Ogochukwu, just in case you don't know. I'm the founder of Money Lessons. I've been actively investing over the last 5 years. I think since 2019, I started investing. I've not lost money. I've not had any fatal investment losses. All right, so it's been a beautiful ride for me. And when I figured the way to invest from 2019, 2020, 2021, I decided that I can no longer keep this knowledge to myself. I was having my friends, telling me of their bad episodes with investing in several Ponzi schemes and bad investment opportunities. I thought that, people should come and learn for themselves from my own wealth of experience and research how not to make those kind of costly investment mistakes again, right? So I don't just teach people how to invest. I also teach people how to manage their finances and how to plan for early retirement. So it's a full package, right? My investing journey, I talked about my investing journey from 2012 in episode 1. It's available on, I think after this live, you could check the, what do you call it again? The series, the episode 1 on YouTube, you could find it to watch. I think it's still available. I hid it at some point, but I made it available now to watch. So you go there, you can find out my journey from 2012 up until 2019, 2020. So 2020 is when I figured how to invest in the US stock market. So there was COVID, 2019, there was this COVID scare that started in November from China. And 2020, some countries started locking down, their economy. And I came to understand that if Nigeria should also lock down its economy, it means that production is going to reduce. And if production reduces, it's going to affect the economy. We're not going to be exporting as much as we should, and we're not going to earn as much dollars as we should within that period of time. So I was expecting that some Nigerian companies are going to receive some shock, either during the period of lockdown or afterwards. And I told my friends then that I'm no longer investing in Nigeria markets, whether it is T-bills, bonds, or this agro partnership and farm crowding, those agro partnerships, fund crowding opportunities that were available at the time. And I gave my reasons that Naira is going to devalue because of the aftermath of this lockdown. Remember that Nigeria is a country or an economy that depends highly on crude oil sales. So imagine that the economies around the world were shut down. Who was going to buy our crude? How many people were buying crude at that point because there was no mobility? Airports were shut down, cars were not moving. So what I feared was going to happen, happened. In 2020, January, Naira was around $400. And by the end of that year, I think it fell to around 470. And from there, started falling, up until where we have it now today at around 1,600 per dollar. So it was that problem I was trying to solve. How to hedge my investment against the valuation of Naira was how I found the US stock market. So I found it because I was searching. I was looking for a way out. It's not because somebody told me about it. I was searching. And then looking for opportunities, I found Bamboo, one of those pioneer investment apps for Nigerians to buy stocks right from their smartphone in Nigeria. And I just bought stocks based on the companies I knew at the time. I didn't do any research. I didn't know how to read financial reports as much as I do today. I just jumped into the market, and I believed that buying some established companies at that time was not a bad decision. And I did, even though the market was down. It was the time when many stocks in the US stock market had fallen. I bought it regardless, and it's been a beautiful journey since 2020 to date. 4 facts on investing. I've talked about investing in the previous series, why you should invest at all, but I just want to give those of us that are here for the first time, maybe you missed out on episode 1 or episode 2 of Alchemy of Investing, and it's good that you should have an understanding of how investing works, because not many people understand what investing really is. Some people think that investing is a get-rich-quick, scheme. All right. People think that investing is how to make money out of thin air. So when they hear about investing, they look at it as gambling. They look at it as an opportunity to make easy money, right? Well, it's true that with investing you can get rich quickly, depends on the kind of investment instrument. But what's also true is that sometimes investing will not return the dividend or your expected capital as fast as you want it. So it requires you to have patience. So investing gives room for returns to compound over time. It takes time. It's not the day that you start investing that you start benefiting from the money that you have invested. This is one of the reasons why a lot of people lose money in investing. It's because they do not have patience. So it is very necessary that you understand that investing is a journey. There's something I often say, that investing is a marathon and not a sprint. If you look at Warren Buffett, the Oracle of Omaha, one of the greatest investors in the US stock market, it took him about 40 years to amass 90% of the wealth he has today. Go and check it. I would have loved to show us today, his trajectory of how he built his portfolio, but because of time, I won't go deep into that. Maybe if you sign up for one of our stock classes in the future, we're going to talk extensively about Warren Buffett. So another fact about investing is that the potential return on any investment is generally proportional to its risk. Generally, it doesn't mean all the time that the higher the reward for an investment, the higher the risk. Not all the time. But most often than not, if an investment opportunity has promised you a high reward within a short period of time, then you should know that there's a likelihood for either losing a part of your capital or all of your capital. And this is why I always tell people that come to my stocks class or to any of my high risk investment opportunities like the cryptocurrency, I will tell you that this market you're trying to get invested in, it is true that you can make a lot of money in a period of time, maybe 2 years, 3 years, or even less than 1 year. But what is also true is that in a short term, you can lose money. So this year now, we have had, Elon Musk and Trump, backlash, right? The Democrats, the leftists of the US economy, they're not happy with Elon Musk with this dodge, move of trying to figure out corruption in the economy. And Tesla has, received a major hit. In fact, people are burning Tesla vehicles in retaliation for what Elon Musk is doing in conjunction with Trump. So not just Tesla has been affected, the entire US market has also been affected. So many stocks have dropped in prices, and I get people send me message asking me, how far, I bought this stock at this price, you recommended we should buy it, and now the price has dropped, my portfolio was this amount, and now is that amount, and all of those kind of conversations I've been seeing recently. Now, this is why the stock market is high risk. So I know some of us, when we hear that an opportunity is a high risk one, we tend to run away from it because we cannot phantom losing money. But one thing that you should understand about the stock market, right, or about investing in volatile assets, is that you only lose when you sell. So same way the price of a stock has dropped, same way it can go up as well. So when people are panicking, you shouldn't, because you already have been told that investing is a marathon and not a sprint. It means that the short-term market fluctuations are not your business. That's why you're here, and that's why I always like that you guys come and learn about the stock market, because most people that panic in the stock market are people that have very shabby understanding of how the stock market works. So when you understand how the stock market works or how investing works in general, you panic less. So investing is not a get-rich-quick scheme. However, it can make you wealthy. Like Warren Buffett has been made wealthy in the stock market. Very soon, in the next 5 to 10 years, you will hear that Gotchu is wealthy through the stock market. Or maybe 10 to 20 years. Investment markets can be highly volatile in the short term. This is a fact. I'm not the one that said it. It's global. It is everybody knows. Everybody that's an expert in investing knows that short term there can be volatility. What does that mean? That the price you buy a certain asset can drop. But if you do not sell, like I said earlier, you don't lose any money. So it is when you panic and sell lower than the price you bought, that's when you record losses. So prices fluctuate based on many reasons, either economic factors, maybe there's a war or there's political, uprising in the country, and there can be any reason for the price to go. But if you look at the stock market, for example, over time, prices of valuable stocks tend to have gone up in the forward direction. So there's something we also always say, in the stock market, is that zoom out. When you zoom out, you see that what you've seen as minus 10% this month, in the last 6 months, is even plus 50%. This is why we always say, have patience, okay? So, where you can invest. Now, these are other places we talked about the first week, second week, that's the first episode and second episode. Today, we're talking about stocks. Maybe another time we talk about ETFs and then Bitcoin and altcoin. Now, why the stock market? Despite the fact that the stock market is risky, like I already said, that there is a likelihood for you to lose some part of your capital, especially if you're not patient, or even all of your capital if you decide to panic and sell. It is still one of the best vehicles for long-term wealth creation. I've been investing in the stock market since 2020, and I'm in net profits. I mean, if I look at all of the stocks that I've bought over time, not all, a majority of my stocks are in profits. I bought some that were not, very smart decisions when I was still learning about the stock market in 2020, 2021. But over time, my portfolio is in green. Even with the dip this year, my portfolio is still healthy. So the reason why the stock market is one of the best vehicles for wealth creation is that you are investing in established companies that are here to stay, companies like Apple, Microsoft, MTN, Tesla. Some of these companies were even founded before they were born. With or without the stock market, these companies are always going to be valuable as long as they have customers or clients that are willing to pay premium for their services or products. These companies will continue to exist. And this is why I always tell people that instead of investing in your family and friends' business, who you have no idea of how he manages the money, who may not even have the financial expertise or skill to manage large sum of amounts, better invest in a company that is established, where they have been in the business of managing billions of dollars and billions of naira over multiple years. So even if there's a risk of losing money because of their experience, they can manage it. But when you give money to your friend or to your brother or sister who has not experienced maybe a bear market before or a lockdown, because many businesses in Nigeria shut down during the lockdown and they never recovered. They did not have the skill or the capacity to manage an economic downturn. Even if they had the skill, they didn't have the financial backing. Today, Elon Musk can go and borrow money from the bank or from other people and use his stocks as collateral. Somebody that's just starting out as a business today, imagine it was Tesla that people are burning your products. How could you survive? You likely wouldn't be able to survive. So this is why we talk about the stock market, because the stock market has companies that are here to stay. When you invest in the stock market, you're investing in this company. So the stock market offers passive income through dividend and capital gains. There are two ways to make money in the stock market. We'll talk more about it. The stock market is accessible to everyone with the right knowledge. Everyone can invest in the stock market. There are many other investment opportunities that everyone cannot invest in. As long as you have a smartphone and common sense and you can follow instructions, you can invest in the stock market. Stock market fundamentals. right? These are the basic things that you should know. In fact, if you know these things and understand it, you are good to go. Number one is stock. What is stock? What is shares? They are one and the same thing. People tend to confuse themselves as to if there's a difference or not. In the US, in the United States of America, it's commonly called stock. In Nigeria, it's commonly called shares. A stock or a share is a unit of ownership in a company. So when you buy the shares of a company, you become a shareholder. Now, you're not just sharing profit, you're also sharing losses. Like I always say that an opportunity that gives you an investment opportunity that gives you, or an investment that gives you an opportunity to make profits in a very short time or long time can also give an opportunity for you to lose money. So when we say a shareholder, you are sharing the risks of making money or losing money in that company. So when they make money, they share with you as dividends. So that's what dividend is. Some companies pay dividends to their shareholders quarterly, twice a year, and yearly. So instead of them investing all of the capital back into the business, they share some profits to the investors. They say, oh, thank you for trusting us. Thank you for giving us your money to do business, right? So this year, we made some good profit. We met expectations. This is what we're giving back to you as a reward. The stock market is a place where buyers and sellers come to buy and sell stocks. Just like you go to the office every day or go to your business place every day, we have people that go to the stock market to trade. So we have what's called stock traders. That's their business. Every day they are trading stocks. They buy, they sell, they buy, they sell. If you watch channels TV or CNN, you'd see market performance that's being displayed every day. It is the activity of these stock traders that influences the prices of stock in the market. What is stock or what is market capitalization? Market capitalization is the price of a stock multiplied by the outstanding number of units in the market. So for every stock, for every company that owns a share, they have a certain number of units that is floating in the market. So that number of units multiplied by the stock price is how you get market cap. So today, I think the company with the highest capitalization is that Microsoft or Apple, or maybe NVIDIA, one of the three. I haven't checked this week, but last time I checked, I think NVIDIA fell from number 1 to number 3. So if you want to know the most valuable company in the world, you check their market cap. So when people say that 2000 is bigger than Zenith or OP is bigger than Zenith, it's funny to hear because there's no basis for that argument. Today in Nigeria, Zenith Bank is the most valued bank because if you go to the stock market and check the market capitalization, it's the highest among other banks. As the last time I checked, I'm not checked recently anyways. So when you want to judge how big a company is, you go to the stock market and look at their position. Most international companies, most multinational companies, most established companies are listed on the stock markets. So a company that is listed on the stock market has a higher reputation than a company that is not, because the financial records of the company is open to the public to scrutinize. A company like OPay, TotalWave, and Co., we don't know what they are doing with users' funds behind the scenes. Only their internal audits see what's happening and can question the MD. But for a company that is listed on the stock markets, the shareholders, when they come for the annual general meeting, some companies do it twice a year, some 4 times, some once a year, they ask questions. What did you use this money for? I've been to a physical shareholders meeting, I think it was recorded for one of the Nigerian companies some time ago, and the shareholders were asking questions. The MD had to explain. So the shareholders own, they hold the management accountable. You answer, why did you spend this money on general admin costs? Why did you spend money on acquiring new employees? Why did you spend this money on technology? Why this, why that, why this, why that? And this is what helps to ensure that there's corporate governance in that company, to ensure that money is not being embezzled. or used for the wrong purpose. What is the stock market index? I think on Wednesday we had a session in ML community where one of our instructor, Emmanuel, talked about the stock market index. So I'm not going to go deep into this. I'm just going to tell you that a stock market index is how you measure easily the performance of a market. So instead of you going to check the individual performance of different stocks, you could just check the stock market index. The common popular or the common market index, the common stock market index in the US is S&P 500 index. And you also have the NASDAQ 100 and the Dow 30 Jones Industrial Stock. When you look at these indexes or indices, you can judge the performance of the market over a period of time without you having to go and check the individual stocks. In Nigeria, we have the NSE ASI, that is Nigeria Stock Market All Share Index. That particular index has an oversight over all of the stocks in the stock market. So it's not going to go and check maybe Zenith, MTN, Dangote, Boa, Presco, Okomu Oil, how they are doing individually. You could just check what the NGX ASI is and make an informed decision on if the market is bullish or if it's bearish or if it's time for you to buy more or time for you to sell. So it's just an easy way to make an analysis of the stock markets. How stock works. So like I said earlier, when you buy a stock, it means that you're owning a piece of a company. If you remember, last year when GTCO was advertising their public offer, they said you can own a slice of our company. They showed an orange, their color is orange sort of. I think you can own a slice. So when you buy shares of a company, you own a part of a company. Now, when you buy shares of a company, you own part of the company. Now, the amount you own depending on the number of units you buy. If you remember, in 2023, there was a bit of tussle between Otedola and Tolemelu over Transcorp, the power or Transcorp holdings. Otedola bought more units, and then Tolemelu, with his wife, they bought more units because the person that has the majority units in a public listed company becomes the chairman or chooses who to become the chairman in most companies. So when you hear that this person is the chairman of a company, the person most often than not has the highest number of shares. So I have shares in Zenith Bank, for example, but my shares is only 2. I don't matter. If, for example, I had 1 billion naira worth of shares, I'll matter. When they are having some important shareholders meeting, Zenith Bank will invite me. So when you're buying shares, you're not just throwing money into the air. You are taking your money in a company that has a future to create more value. Because the more value a company creates, the more revenue they earn, the more profit they make. And shareholders will get excited, the share price will go up. That's how it works. So the share price is determined by supply and demand. If more people are buying over a period of time, price will go up. If more people are selling over a period of time, price goes down. Sometimes the company performance also helps to infer whether people should buy more or sell. If the company revenue is going up or it was better than the previous year in view, shareholders are excited. They buy more. The same thing with profits. Market trends also support it. If it's a company that's involved in AI, and we're saying now that AI is the future of computing, AI is the future of the world. I was watching Tesla, Elon Musk recently was talking about how the world is going to transform in the next 5 to 10 years. So when you start looking at a company that is futuristic, a company that is likely going to solve future problems, the stock price will tend to go up because people like to bet on the future. People like to bet on the future because there's no benefit in betting on the past. So if a company is performing well, the price of the stock will go up. If a company is not performing well, the stock price will go down. How do you make money in the stock market? If you buy a stock today, say for $100, and maybe in another 1 year, the price increases to $200, whatever amount you invested, if you sell, you make 100% increase. So you invested 1 million, when it was $100, by the time it gets to $200, you now have 2 million. So when you sell, whatever you get as profit is due to capital appreciation. Now, sometimes you don't need to sell. You can make money from your stocks without selling the stocks. How do you do that? Dividend, like I said earlier. Some companies pay dividend to shareholders. Some companies do that on a monthly basis. Some companies do that on a quarterly basis. Some do that on a yearly basis. So these are the things you need to check, before buying stock. Now, why choose the stock market over other investments? There are many other investments out there. I just try to compare a few for you, because some persons are not able to make this decision on what to invest their money in. I had a one-on-one session with someone this morning, and we're talking about different opportunities. He had knowledge about the mutual fund market, but he didn't have knowledge about the stock market. And so I kept on explaining, and I told him to attend this class. I hope he's here to learn more about stock markets. Now, the stock market, has likelihood for a high return on your investments over a long period of time. Now, a long period of time can be 2 years. I can remember I bought NVIDIA, and in 2 years, it's increased by 400% or 450% thereabout. Now, that doesn't happen all the time, but over time, most of the valuable companies are going to return good percentages, especially if you are investing in companies that are solving future problems, like I said earlier. Compared to the real estate market, stock market is liquid. What do I mean by liquid? If you invest today and you want to get your money out tomorrow, you can do that as long as it's a weekday. Real estate, if you buy a land today, you can't even sell it next tomorrow, because they will even take time to do documentation. In 1 week before the land can even become your property, before it can even become owned by you fully. In fact, some real estate companies can take 3 months to process documents. Now imagine you now need to sell that land within that 3 months period, based on the fact that you need the money to solve either an urgent need or something that was not planned. What do? You have to sell at a distress sale. Or you start asking people, do you want to buy land? You want to buy land? You start hawking your land. And the stock market is going to hawk your stock. If you want to sell, you sell. Just go back to the same app that you bought the stock and press sell. The money gets into your wallet, you withdraw it. No stories. The market determines the price. Now, in real estate, you want to sell a land or a property, it's not just the market that determines the price, it's the agent, it's the buyer, and many other factors. How soon do you want it out? The shorter time you need to get the money from the land or property you want to sell, the less money you get, because once people figure out that you're desperate, they'll start pricing you anyhow. I bought a distress sales land recently. I figured out the guy was very desperate. I bought it for half the price. But the stock market, you won't have to sell it for half the price. Now, the real estate market compared to the stock market, you need high capital. In the stock market, you can start investing with as low as $10, $100. Is there any land in Nigeria you can buy for $100? $100 today is about 160,000. Even in your village, well, in my village, there's no land for 1 million. I don't know about your own village. So you need high capital to invest in real estate. Stock markets, you don't need high capital. Stock market can also give you passive income, even with your small money. Real estate, yes, you can do rental property, Airbnb and co, but you have to be already a multimillionaire before you can do that. Money markets, where you have commercial papers, bonds, treasury bills, is very good also to invest. But now, when you compare to the stock market, the return on investment is very low. You'll be looking around 20% to 30% on a yearly basis. The stock market can return 100% in 1 year, depending on the stocks you buy. So money market is low risk, which is good, right? But low reward. It's semi-liquid. Some, instruments that you buy, you can get it out in less than 1 year. Some are fixed, like commercial paper. If you buy it, you have to wait for 6 months. Bonds, you have to wait for 2 years. If it's FGSA bond. If it's mutual funds, some companies or fund managers would require that you wait for 1 month, and you will lose some percentage of the profits. If you don't want to lose any percentage of the profits, then you have to wait for 3 months. Stock market, you don't need to wait for anything. You buy today, you can sell it tomorrow if you want. You're not having to lose anything. Apart from maybe the trading fees, the fees that's taken from you when you buy and when you sell. Mutual fund also, some fund managers take fees from the interest as well. Now, when you compare the stock market to a business, now we all know that business has a higher potential for return. I always say that if you want to become a billionaire, you have to sell products or sell services to a large number of people per time. And that's the only way to become a billionaire. So investing could get you to a billionaire figure, but then it'll take a very long time. It could take you maybe 40 years. There's a woman that retired recently. I think she talked about how she accumulated over a billion naira by investing. Somebody shared that article in the ML community some time ago. It was very interesting one. It's available on the internet to search and read of how she was able to acquire a billion naira in investments, investing in multiple instruments. So it is possible to become a billionaire in naira via investing, but it will take you a longer time. Somebody that is in his mid-30s in Nigeria as a successful businessman is already turning over millions of naira. So true that you can make a lot of money via business, but not everybody that gets to business is successful. Like I said earlier, if you don't have the experience, you don't have the knowledge, you don't have the human capital, you don't have financial support, if your business goes through a difficult period, it's going to shut down. And with your business, it's not like you can maybe sell off and get some profits. If it's a loss, it's a bad loss. With investment, if the investment is not doing very well in the stock market, you can wait. For your business, if it's struggling, you can't wait. It's either you put in more money or you shut down and go somewhere else. If you buy a company today, say Tesla. I remember 2 years ago when Tesla was underperforming, a lot of people were panicking. Some people sold at a loss, thinking that Tesla was never going to go back up. Some people waited, and the price went back to the previous all-time high. You can wait. You can't wait for your business to recover. It's either it's dying or you save it. Either you kill it or you save it. If you don't have money, you can't save it. In fact, in trying to save the business can even kill you in the process. So, if you're a salary earner, I always recommend to people. So if you're a salary earner, I always recommend that you forget about investment. Focus on your job, get more experience, get more skilled, leave that company you're working, get to a place where they'll pay you more money, increase your paycheck, invest more, spend a little time there again, live there, go to another company, increase your paycheck so you can invest more money. That one is more predictable. Business is not predictable. In our economy today where you can see what's happening in the economy with the kind of person we have as a president. Anything can happen. Recently, we had Dangote telling us that it's not going to be selling fuel to us again in naira. Why? Because the government just woke up and decided that they're not going to be selling crude oil to him anymore in naira. So now Dangote has to be buying crude oil in dollars. It was not planned, not expected. That's a big shock. If it was not Dangote that can take that kind of shock, if it was not big enough to take that kind of shock, the company will fall. A lot of businesses are folded because of economic policies, bad government policies. And like I said, you can't wait. If a government policy hits your business today, either you kill it, or it dies by itself, or you save it. If you don't have money, you can't save it. So these are the things you have to think about. So people would say, oh, instead of me to invest in this opportunity, I'll go and start agriculture. I'll go and invest in farmland. I'll go and invest in yam. tomatoes. Are you seeing what's happening now in the economy when it comes to food prices? The government decided to do a subsidy on the tariff for importing food produce. Things like maize, cassava and coal and some other things, the prices are dropping massively. Farmers are complaining because if they produce in their farmland, they can't meet up with the low price of commodities that are imported. It's at a loss. So imagine now you decided to start agriculture last year, towards the end of last year. Whatever you have planted this year, if you harvest it, you cannot match. You cannot match the cost of production or the cost of the current sales of those products in the markets, the imported ones. So don't just get excited to the the potential for high return in doing business. There is no guarantee. So always weigh the difference, right? I'm someone that have been involved in business over the last 12 years of my life. I've done business, several kinds of businesses. I've done investing, and I will choose investing every day, every time. I'll keep my job and choose investing. If I find a very beautiful business idea that's very valuable and my job will not allow me to do it, then I'll quit. So cryptocurrency, we all know cryptocurrency is speculation, high volatility. There's no product. There's no, Bitcoin, we can say Bitcoin is a product, it's a store of asset, store of value. But every other cryptocurrency are all based on speculation, right? They're not solving any real world problem like that. So if you buy the cryptocurrency, you should be expecting, anything to happen. That's what it is. So I would choose stocks every day over cryptocurrency because I can have a long-term view, when investing in stock markets. Crypto markets, there's the bull market, there's the bear market, and not every cryptocurrency that goes down in price that will come back. Even the valuable ones. Look at Ethereum today. Look at Cardano. They are doing very badly. But when you invest in a valuable stock, right, even though the market is performing badly today, there is a good or great likelihood that the price is going to recover back. So the stock market and the crypto market is not one and the same thing. Many people are not able to differentiate it. I already told you stock market is investing in established companies. The crypto market is investing in speculative assets. Assets are not tangible. You don't have any products that Bitcoin doesn't have any product that is tangible. Nobody buys any product or services from Bitcoin. Apple, people buy iPhone. People subscribe to iCloud, Apple Music, and so on. So many ways for these companies to make money. So they can have one bad year where their revenue did not meet expectations and the stock price goes down, and then they will recover later, like what happened to Meta. Right? There was a particular time when Meta was pursuing this metaverse, how people can communicate and interact in the metaverse. Shareholders were excited, but Mark Zuckerberg could not meet the expectations. The product did not work. They lost billions of dollars. What happened to the share price? Share price crashed. Mark Zuckerberg dropped from number 7 to about number 15 in Forbes ranking. Today, Mark Zuckerberg is number 3. He has recovered. Everybody that panicked and sold their Meta stock when I was telling them not to sell are regretting. I did not sell. In fact, I bought more at that period of time. So you see the difference. It's not one and the same thing. Many people confuse both. It's not the same thing. How to choose the right stocks? We're almost coming to the end. Choosing the right stocks can be very complicating or difficult for somebody that is a beginner. So if you know how to get financial reports, right, you can look at their revenue and their profits over the last 3 years and make an informed decision. If the revenue is increasing year on year for 3 years as a minimum, that's a good company. That's a company that has a future because they are making revenue growth because their revenue is growing on a steady basis. Their profit is also growing on a steady company. So if you want to compare one company with another one to buy, look at their revenue, look at their profits over the last 3 years. Look at the industry. There's some industries that are doing very well now. in the United States stock market, AI is a big deal. You can see that most of the companies that are involved in AI computing companies for them to come up with an antivirus against COVID. So you have to look at the industry trends. What's happening? What's going on? Sometimes it might be unprofitable to invest in certain companies, even though they are big, like Nestle, for example. Nestle, MTN, and Co. suffered a setback in 2023. Why? Because of the sharp devaluation of Naira. I told people in the community then that you should worry about investing in foreign companies listed on the Nigerian stock market. Nestle, MTN, and some other foreign companies, because the owners or the shareholders or the initial investors, they look at their earnings in dollars. So by the time they calculate the money they made, the revenue or profits, and convert it to dollars, it's going to be low because of the devaluation of Naira. So shareholders are not happy. Their records were showing massive losses here and there, and share price kept dropping. Today, Nestle is bad, as in terrible. Meanwhile, over the last 4 years, up until last year, they have been consistently making profit. So you have to understand the industry trend. You have to understand market movements. When you want to do technical analysis, some people, they don't know fundamental analysis. They look at technical analysis. They can look, okay, the price at this time, compared to a year ago, price is low. Let me just buy, because the price is low. That's technical analysis. Like when I wanted to buy some stocks in 2020, I didn't know how to look at the revenue and profit of these United States companies. What did I do? I just bought because the price was low. And it worked out for me. So I checked high-performing companies. I checked that, compared to the months I was buying, their price dropped. So I looked for the ones that were minus 50% down, minus 60% down, minus 40% down. People were running away. I was buying. Warren Buffett has said it: be greedy when others are fearful. And fearful. See, I say these things all the time, but it sounds like theory. Be greedy when others are fearful, and fearful when others are greedy. That simple thing is what determines or separates a successful investor from unsuccessful investors in the stock market. Simple theory, just simple. I entered the stock market in April 2020. If I go and check on the news, what was happening in 2020 April, the economies of the world were shutting down. People were running. Some people were selling their vehicles thinking that Antichrist was coming. Logical was spending dollars buying stocks. Because I learned early, be greedy when others are fearful. By 2021, most of the stocks I bought have recovered. So because they now surpassed their previous all-time high, I was seeing some around 70% up, 80% up, 100% up. The only thing at that point is that I didn't invest, a lot of money. Well, it's a lot compared to some people, but if I had as much confidence as I have today, I'd have done way more than that. So before you choose a stock, you have to know, do I want to get dividend or do I want to get growth? Some stocks don't pay dividend, like I said earlier. Some pay dividend, despite the fact that they're a good stock. Apple stock, for example, used to be likened to a good stock. They pay dividend as well. Good stock just means that the stock grows faster compared to stocks that primarily pay dividend. Companies like, Companies like Coca-Cola, Home Depot, Waste Management, those companies are not growth stocks because the price of their stock or share moves very slowly, but they pay dividend consistently. How to diversify your portfolio. Don't put all your eggs in one basket. Now, I've told you the advantage of investing in stock markets over real estate, over money markets, over starting your own business. But do not say because stock market is interesting, is, has high reward on investment, then you put all of your money in it. No. As the one written in the scriptures, spread your bread upon the waters, for it's not only one that will come back to you. So do not at any point in time invest all of your money in the stock market. Otherwise, you have sleepless nights. That some people are not sleeping well today because they invested heavily in the stock market in January, February. Now the market is down. They are panicking. They are shitting their pants. Okochukwu will never panic because he does not invest all of his money in one asset class. I have real estate portfolio. I have money market portfolio. I have stock portfolio. I have crypto portfolio. I also invest in my business, in my side hustles. I invest. I buy camera. I buy things that will help me to make more money. That's it. Again, garbage in, garbage out. If you don't invest, you get money out. You cannot get money out of thin air. Create value and get paid. So spread your investment across different sectors in the stock market. In US, you have tech, you have health, you have manufacturing, you have automobile, you have aviation, you have entertainment, you have hospitality. And that's so many sectors. In Nigeria, you have banking, you have manufacturing. So don't just go and invest in tech. That's a lot of people in their portfolio is in shambles because all of their money was chasing all of these growth stocks. You're too greedy. You can't invest all of your money in AI stocks because you have heard that AI is the future. But you have forgotten that because they are tech stocks, they are more volatile than other stocks. So now your portfolio is in red and you can't sleep. But you were the one that wanted to make all of the money in a very short period of time. How did you forget that you're the same person that did that made that investment decision? So diversify. Don't be too greedy. See, I have Coca-Cola. Coca-Cola is one stock that does not grow. A very sluggish stock, but they pay dividend quarterly. You just have it there. There are some stocks that are called defensive stocks. When the stock market is down, they don't even move because they did not even go up before. So where are they moving to? They just stay where they are. Most of those defensive stocks are held by boomers, by people in their late 40s, 50s, 60s. They did not buy those stocks using smartphone or computer. They bought it through the traditional means. So the ease for them selling, like those of us that use smartphones, is not there. Some of us, because it's smartphone, we'll go and open it. Somebody bought. Somebody attended one of my stock class some time ago, and she was just updating me on the price of our stocks every hour. Like, I said, come on, that's not what we do here. Why are you checking your smartphone every hour? It's not a business. It's investing. You invest and leave it. Forget it. The only time you should be opening your portfolio is maybe once a month when you want to buy more stocks or when you want to evaluate the performance. You don't need to be opening it every month. You don't need to be opening it every day or every week. Don't just cost yourself unnecessary pain. Because a particular stock can fall in price today, and before the week ends, it goes back up. If you don't open it within that week, you will not even know that it went down. But if you are one that is always opening every time, you'll be seeing all of the up and down, then you'll be having palpitations in your heart. Unnecessary trouble. Spread your investment across different markets. Invest in Nigerian markets, invest in US stock markets. Invest in US stock markets so that you can protect your investments against devaluation of Naira. Invest in Nigerian stock market so that in case you have short-term Naira expenditures, you can sell off some of those stocks and attend to it. How to get started today, very important. So for those of us that stayed up until this point, I'm going to share a link where I have videos for how you can use the investment apps that are available for us here in Nigeria. If you're watching from Nigeria, if you're not watching from Nigeria, maybe you have to send me a message and then we'll find a way on how you can get started with investing in the US, United stock market or the Nigerian stock market. So first is to open a brokerage account and then start with low-risk stocks. Low-risk stocks like Apple, Microsoft, Tesla, Zenith Bank, Access Bank, GTCO. And then invest consistently. Investment is not a one-off thing. You don't just invest today and then forget about it until the year ends. That's not how to invest. That's a lot of people are not successful with investing. They invest when they feel like it. You don't invest when you feel like it. You invest because it is a necessity to invest. You invest regularly, just like the same way, you know, you do some things on a routine basis. You should also have investing as a routine. That routine can be weekly for you. It can be twice a month for you. It can be once a month. But just make sure it's not less than once a month. That is the only way you can build wealth via investing. If you invest seldomly, you can never, ever build wealth via investing. You can't. So you have to keep learning. Those of us that are here, despite the fact that have attended several money lessons live or investment classes, you're here, keep learning. Don't just listen to only Ogochukwu. Go and listen to other people. Go and check. What is this boy saying? Is he even correct or is just talking nonsense? Go and compare notes. Be ever learning so that you can tweak your investment strategy. Some of us today were scared of the crypto markets. But if you begin learning about the crypto market, it will help you to manage the risks associated with it. That's it. So like I said earlier, investing is a marathon and not a sprint. Avoid get-rich-quick schemes. Someone was asking about CBEX in my community. I just saw it and did not know what to say. I just ignored it. In those days, I would have done a review about CBEX, but now I don't care anymore. Anybody that wants to invest in a policy scheme, save Johnny, go and invest. I cannot be laboring every day talking about investments on Facebook, on Instagram, on TikTok, and then you now come and ask me if you should invest in CBEX. Please, go and invest. I'll come and tell me how it will be later. Diversify your investments. Do not invest in much. Do not invest in only one opportunity. I see some people talk about real estate as though that is the best thing after sliced bread. It's not. Do not pack all your money and go and buy land. If you go buy land where they'll go do state capture. Do you know what's happening in River State now? Imagine that you bought land and you're hoping you sell this year in River State. Who go buy that land at the price that will make sense with this state capture now? And these are the things you can't see in the future. So don't just go and say, emerging location. Emerging location, you pack all your money and go and buy land there. No, that is foolishness. You're not wise. Nobody will tell you are real. No matter who is selling, give you the opportunity. Don't take all of your money into the stock market. Don't take all of your money into the money market. Don't take all of your money into the real estate market. Don't do that. Keep on investing. Never stop investing, because that is the way you're going to get wealthy. Thank you for listening. This is the end of the road for Academy of Investing 3. If you do have questions, now is a good time for me to take them, put them in the chat box. If you don't have any questions, I'm going to drop the link to, what's it called? I'm going to drop the link to the Telegram channel where I have some videos of how to use stock investment apps like Bamboo. Okay, so those of you that stayed to the end, congratulations. Like I said, you don't have to be here, but you did it for yourself, did it for your children. Some of these things I've shared with you are things you can transfer to your next generation, right? So that they can start much earlier than you did. Okay? So I'm waiting for questions. No questions. I would like to run away. Okay, so I've dropped the link. I don't know if it's clickable. Maybe you have to copy it or type it. That is my thank you for staying with us to the end. Questions. So we have an investment club where some of these things that I've shared here, we share them intermittently in the club. So you don't have to attend live. If you don't want to, you can watch the replay at a later time if you subscribe to the investment club. So it's a one-off registration. If you follow the link bit.ly/MLC Investment Club, you can get access, or send me a message on WhatsApp if you want to learn more about the investment club. Talk about investments all through the year. It's a one-off registration fee. All right, so you get guidance all through the year. All through the year, get guidance on where to invest the money where to invest the money in stocks, in crypto, in bonds, commercial papers, and so on. So you can send a message to that WhatsApp number or to my own number if you have it. Let's talk. So I'm looking at the chat box. I can't see any questions. So I take it that we're all happy with what we have learned. Or maybe your network is not synchronized live. So your questions are going to drop later. I don't know. If at the time that this live ends and you have a question, I don't know how we're going to do that. But let me just wait. So I'm just going to wait for another 2 minutes and see. Ifeoma, thanks for joining. Felix, thanks for joining. Joseph Bukakos, I see you as well. Vincent from Calabar, good to see you as well. Okay, I still have some of you here. Are you typing your questions or you don't have any? All right, so if you haven't subscribed, hit the subscribe button. So next time when there is a live section, maybe not planned, you don't miss out. Or if I share any video on personal finance and investing, you can also participate in it. In the absence of questions, once again, thanks for joining us on Money Lessons Live, Academy of Investing, episode 3, How to Build Wealth in the Stock Market. We are going to continue this series next week with the last episode on cryptocurrency. So if you always wanted to learn the basics of cryptocurrency or want to invest in cryptocurrency and don't know how to get started, don't miss out. This is the last free session for stocks investing this year. So if you're here, celebrate yourself. Those of us that are not here, maybe on behalf of those that are not here, you can tell them that you missed. The next stocks class is going to be a paid one, and it's going to be much more detailed than this. It's going to be a 2 days class. Okay, let me check one more time if there are questions. Can you circle back on where you dropped the links? The links is on this chat box. The links, I don't know if it's going to be clickable, but I'm dropping it again. I'm dropping the link again. Or if you attended, just send me a message that you need a link to the group or to the channel for the videos. Wow, Annie Bets, you just joining. Well, usually I leave the not usually. Last week I didn't do that, but this week I'm going to do it so you could stay back and watch the replay before 12 o'clock midnight. All right, bye everyone, and see you next week.